Usually it's the reverse of what they do. So I was hoping that they would sell them off on the
sell
print,
into the news, and then
they would rally them after. So I'm worried that this doesn't hold. And the market's been strong on every basis that you can imagine. So I would assume that it holds this level. But I am nervous because it's usually the reverse of the initial move. What Steve said about the neutral rate has me worried as well. Are they looking at GDP? Is it transitory? Is it a longer ended GDP? Where are we in that?
Right. Lori?
Well, what I'm noticing is that the financials are not behaving well right now, and tech is doing well, and that's been a little bit more of a defensive trade lately. So I would actually agree with you. It looks good at the S&P numbers, but doesn't feel good underneath the surface.
You know, I think this is the case of the missing cycle. I mean, we've got growth trending out above neutral. Or above long-term trends. We've got unemployment below its long-term trend. We've got holding the federal funds rate at a rate which is supposed to slow the economy down, except they're saying it doesn't really slow the economy down. And, you know, it's either sort of suspended animation or suspended disbelief that we can go another 3.2 years with basically no real change in the unemployment rate. That's unlikely.
It does feel like they're just doing it to do it at this point.
Question for David. A question for David. I was right before we got the news. I was going to say I was persuaded by David's argument that why remove the language about accommodative until you get to that point where you are at neutral. I wonder if what the Fed is saying, and I'll direct this first to you, David, and then to Steve Liesman, has the Fed implicitly said that neutral may be higher than what neutral was?
I think they're implicitly saying they don't know where neutral is.
Yes.
And I think that actually, and that unfortunately, I think just sows uncertainty. And the last thing you want is uncertainty. They may not know, but they shouldn't say they don't know.
If everyone's striving for neutral, right, and we don't know, and we believe the Fed doesn't know what neutral is.
Well, essentially, if they say,
but they do
they
actually,
don't know they're accommodative, therefore they don't know they're neutral. Where neutral is.
But I'm sorry, but they said that above neutral would be 3.4%. 3.4% is where they say would be above neutral, and so therefore can't we presume that neutral rate is below 3.4%?
Steve, jump in here on this. You know, it was the old the Supreme Court justice who said, I don't know what pornography's definition is, but I know pornography when I see it.
Are you seeing pornography?
And so I'm saying maybe the Fed doesn't know neutral until they see it.
I think that's right, and it's well to point out, Tyler. They did raise the neutral rate from 2.9 to 3%. That's not a big jump. In general, over time, the Fed's neutral rate has come down. Are we now at a point now? I think you're asking an excellent question of whether or not it's on the way back up. The Fed has said in several speeches that the neutral rate is something that can move around over time. But I want to just say something to folks who are like, well, why is the Fed raising rates? I think there's a message in this. You cannot trade the stock market as if the economy is at 3% and not expect something like a 3% funds rate. And I think this is more for Grasso. If you're going to have your cake, you got to eat it too, I think is the way to think about it. The Fed is saying, look, the economy is doing better. Unemployment is low, and by the way, they're willing to tolerate, it seems to me, a very low unemployment rate. GDP above 3%. You know, they see the steady run rate of the economy potential at 1.8%, and then look at the unemployment rate. Yeah, go ahead.
Do you see the GDP as a transitory above 3%? Do you see it as going to 3.5, 4? Or do you see it as front-loaded from the corporate tax cuts, from the tax overhaul, and do you see that coming in versus escalating and ratcheting higher? Because if you see it ratcheting higher, then I understand why you're raising rates. If you don't, then I think you sit on your hands.
I think you gotta raise your rates even if it's temporary, Steve. I think my story is we're going to see about that stuff, right? I think you're going to the best scenario that I could imagine is we're able to raise potential into the 2.25, 2.5, maybe a little bit above that range. I don't think 3% is the new run rate of the economy unless we somehow figure out a way to make these phones be a whole lot more productive than they've been.